Is China panicking? I think they are. Again, I will explain this why with the Kobeissi letter screenshots from Twitter. China is panicking, they're saying. I'm saying, is China panicking? Well, is the Fed panicking? Because Fed keeps saying everything is fine. Economy is growing at a good pace. Unemployment is fine. Inflation is going lower and lower. In fact, today was another indicator. Inflation is going lower. I'm calling it they're gaslighting you. Inflation is not going lower. I have so much content on the channel. All you have to do is go back, read the headline. Is the US government gaslighting you? Is inflation really exactly what they say it is? Well, go check those out. And then it has data in it, and go check them out. Let's see if you agree or disagree, and please share, seriously. So in fact, China, by the way, why are they panicking? If everything is so good, according to the Fed, everything is great, why cut the interest rates by 50 basis points? They did it last week. Why? You only cut rates when you see a blurry picture ahead, right? And they're forecast to cut by 200 basis points by the end of next year. That's 2 percentage points. What I know from my economics degree and finance degree is Fed only cuts rates when the stuff is about to hit the fan. So they're trying to preempt it, right? And all global central banks are cutting rates. If everything is so good, why are we cutting rates? Now, the danger of this is going to be a reacceleration of inflation. Market is definitely not pricing that in, which 100% I'm convinced of that. If I'm convinced is my name. So my point is, if everything is great, why are we cutting rates globally? I don't know. Are we forecasting something that most people are not talking about? Well, we'll see. So China is panicking. In fact, China is showing 2008-like signs as they are on the brink of a severe recession. So you guys understand this is the theme today, right? Recession, yes, no, why, warning signs, forewarned, be ready, be careful, may not happen, but at least you guys have at least an idea of what I'm looking at on the macro side. Trading is different. Macro is something that you need to pay attention to. So over the last 2 days, China has begun pandemic level stimulus. 100% correct. This actually did happen Wednesday. Chinese central bank cut the rates by 50 basis points. So we're at 5% and we cut 50 basis points. Okay. They're at 1.25% and they cut 50 basis points. Think about it. So is China dragging the global economy into a recession? Remember, we used to have a saying, as the US goes, so goes the global economy. Isn't it funny, after like 20, 25, 30 years of us shipping all the manufacturing jobs to China, now China is if China gets a cold, the rest of the world catches pneumonia. Is that what's happening here? You guys see this trend over the last 30 years? Well, yeah, but that's not the topic. So here are a couple extra charts. Okay, so the chart on the left is China's housing market collapsing, literally collapsing. Now, most of these, by the way, as you guys know, Chinese economy is the government's economy. Government has their hands, the Chinese Communist Party, the CCP, has their hands in everything. They practically own every business. Although there are private businesses like Alibaba's and Tencent and Baidu and whatever. As you know, all these are all replacements of Google's and Twitter's and Facebook's, because China does not allow, Chinese internet is closed. So China does not allow any of the stuff that goes on in our country with this lives matter and that happens and this happens and abortion, and none of that stuff happens in China. Everything is controlled by the government, by the Chinese Communist Party. So the first signs of weakness came after China's real estate index fell a massive 82% in just over 2 years. Think about this. And then look at our housing prices, where they are. I don't know. Evergrande is one of China's real estate giants, again, controlled by the government. This came as Evergrande one of China's real estate giants filed Chapter 15 bankruptcy. And look at that chart. Look at that chart. That's the Chinese real estate market, okay? This put the index back down to 2008 levels. And what did the Chinese Federal Reserve do? They go, dang, 50 points base, 50%, 50 basis point interest rate cut. The other thing, and the chart on the right, if you guys can't see this on your small screens, if you're watching on a cell phone, take a screenshot or go to the Kobesi letter. This is on their Twitter handle. China currently is facing the longest period of deflation. Now, you guys need to add this word to your vocabulary, because like Japan was in a deflationary cycle for 20 years. They literally had negative interest rates to get themselves out of deflation. If you ask me, which one is worse, inflation or deflation, which is the complete opposite of inflation? Deflation is much worse. You don't want to even go near deflation. If you go near deflation, every single asset price will be collapsing. So you don't want deflation. You want some inflation, like oil, in an engine, but you don't want like too much of it, like we did last 3-4 years. Although the government gaslights us and says, it's just 2%. I go hogwash, hocus pocus to that. It's not 2%. But not even 2008 came with 5 straight quarters of deflation as we are seeing now. Okay. On that chart, there are black bars that are going above the zero line, and there are light blue lines that are going below the zero blue line. So that's when the lines below the zero line in blue are deflationary periods. So most economies would like to have inflation controlled to a certain point, but not deflation. Deflation is absolutely killer. Okay, I take inflation over deflation anytime. And so after a period of 5-6 blue bars, and they brought themselves out. That was in 1998. Then you had a short period in 2009, and we know that's the GFC, right? The whole globe was about to collapse. And then what happened? They cut the rates. They flooded the markets with cash. They printed money, whichever Federal Reserve could print, and then they just pumped it into the economy, saved the banks. Remember, too big to save, all that stuff, which they shouldn't have done, but they do. They have to, because otherwise the whole global, economy would collapse, because we're so intertwined now. We don't have what we had 30 years ago, that everybody's an island on their own. We all depend on each other. And then now, that's the warning sign the Chinese Federal Reserve saw and cut the rates really, really aggressively. I don't think anybody expected it, actually. And what did that do? That pushed all the Asian markets higher to all-time highs. Again, all this is happening. All this negative stuff is out there. But now the markets, because 6-8 months ahead, they're all making new all-time highs, saying that all these rate cuts are going to help actually in the future. I'm just not seeing that yet. But, if you guys join me in the future, I will keep you posted, obviously. And now we have 5 quarters of blue line, which is deflationary periods, under the zero line. So that's what the Chinese government's saying. That's what they're panicking, and they're going like, okay, we need to cut rates. This is not good. We don't want to not only kill our economy, but we also don't want to drag the global economy into a global recession. So we'll find out. A lot of this is open-ended, because I want to create this conversation, and I want you guys to create this conversation. And there'll be people who take one side, there'll be people on the other side, but it's good, not debate. It's a good conversation. It's a good discussion that we need to have. And the last one talks about China. Deflation, the definition of deflation. Deflation is the exact opposite of inflation. It's when prices fall. When prices fall on everything. Literally, whatever you're buying on the street, your food, your cell phone bill, everything falls. And that includes your investments, which is the market, right? So while this may seem welcome, the economic impact is detrimental. I agree. If you know prices are falling tomorrow, why would you buy today? So what happens is that creates this domino effect. If you know tomatoes are going to be cheaper price tomorrow, why would you buy tomatoes today? So it kills demand completely. right? If you know a piece of real estate you're going to buy next month is going to be cheaper, why would you buy it today? So it absolutely decimates demand. And to get out of deflation is much, 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 much harder than to kill inflation. So the result is an economy that is effectively frozen. I completely agree with this. So I'm not saying that's happening here. It's happening. It looks like the Federal Reserve of China is thinking that's happening.